Let's get it. Let's get it. Roach gang, 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 roach gang. Yeah, under the fridges, worm stain. Ooh, bitch, you know I ain't playing. Yeah, I like water with sugar cane. Ooh, nuclear bomb out of Bill Payne. Yeah, I can't fly cause I'm not a plane. Ooh, I like crumbs and candy stains. Yeah, roach gang, roach gang, roach gang, roach gang, roach gang, roach gang. Under the bridges, worm stain. Ooh, bitch, you know I ain't playing. Yeah, I like water with sugar cane. Ooh, nuclear bomb out of Bill Payne. Yeah, I can't fly cause I'm not a plane. Ooh, like to eat crumbs and candy stains. Yeah, roach gang, 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 roach gang. Climbing through your air vent. Ooh, I could smell that sugar scent. Yeah, still the best of the insects. Me and my fam like to lay eggs. None of this food be new to me. Nope. Eat it up, even if it's rude.
Let's go, let's go, let's go, let's go, let's go. Let's go get some money for the plan. Man, where's the camera at? Alright. Wait a little bit. Just gonna go over this thing now in a little bit more detail and draw it up. I didn't see that this Windows Edge PDF had a place I could draw it up. So definitely like this. Alright, let's go. Whoever's here, what's going on? Whoever's not and coming in later, let's go. Let me write this. Hold on a second. Yo. Yeah. So all right, let's get it. So we doing some fair value gaps, baby. So we're gonna go over right here, and let's just do our own little review real quick. So even before I go in there, I like to draw it myself. I know fair value gaps are the gaps this third bar makes. I usually call this my space bar, you know, just to remind myself, especially when I first started learning. So we know the gap is this part right here, right there, right there, right? And if we're going down, the down gap is like this. Again, I just like to review for myself. I know this down gap is in between again, right here and right here. And where this gap is like that, what we're looking for is price to come here, break into it, bounce back up. Price to come back here, break into it, come back down. Oh, hold on, guys. Let me make sure everything is visible from Instagram. You gotta make it a little smaller. Hold on, hold on, hold on. Instagram, it's you gotta make it really small. And I got some people on there trying to learn and see as well. Oh, maybe if we make this smaller, that will help. What about now? Something like that. Yeah, y'all just tell me when it's good. Yeah, you just tell me when it's good. You want me to make it smaller again? What about now? Oh, this might be too small. Should be good now. Tell you what, if you can't see, just tap into just go to YouTube, Twitter, or Twitch, one of them. But yeah, so let's get back to it. Okay, so Sibby, Bissy, sell side imbalance, buy side inefficiency. So I think that just means it's a strong bearish fair value gap. And then the buy side imbalance, it just to me means it's a strong bullish fair value gap. I don't see nothing else crazy. Volume imbalance. Okay, so I think that's where the wicks overlap, if I'm not mistaken. So it's like this bar right here has a wick. Damn, this drawing is crazy. Cancel. How can I? Okay, here we go. So let's just say there's a candle here. Please excuse the drawings. And then there's another candle here. And it would literally just be this little place right here where only the wicks overlap. Same thing for the bullish, right? Just see the wicks overlapping. And it's the same way you basically treat them how you treat these gaps. You want to see price pull back into it, fail, right? Boom, boom. Price pull back into it, go up. Opening gap, I would think that's, I mean, that's, I don't know. Sometimes they make it hard, but sometimes it's just like, if you look at stuff like kind of common sense, right? Like I got a down bar right here, and then all of a sudden there's a down bar right here. There's like space in between. And then, for the bullish bar, you got one right here. And then all of a sudden there's one right here. Like to that little space, right? And the little space here in between these two. That's the gap. Entries. So I think once it comes in here, you could enter here, or you could enter here. You could enter here. You could enter here, right? I don't know. So these are some entries, like even here too, right? Enter here, and I think you would just once the price comes back in, same place. I'm still working on finding out my entries for the fair value gaps, honestly, because I'm so used to my bar, waiting for my bar to close, you know? But nowadays with these fair value gaps, you just gotta get in there. You just gotta literally get in there, trust that process. And you're only gonna do that with back testing and seeing it happen in real time. You ain't there ain't no other way. Okay, it's stop losses. Let's make that purple. Like so if I got in here, you could have a stop loss here or a stop loss here. Right in between those. So it's either below the first candle that starts the gap or below the gap itself, right? Or if you're going short, it's above the gap or above the first candle. That's just how I see it. I don't think that's nothing crazy. Now the inversion, honestly, I don't know how, but I think I've been looking at the inversion and noticing the inversion a little bit more than anything else, right? So let's say we have this down gap, right? Remember, we need our 3 bars. This is one, this is two. The second bar is what usually makes the gap. I call that my space bar. Again, drawing is absolutely terrible. Maybe I should just be typing these things, but we're gonna keep trying to draw, right? So now there's a gap in between here, another one, and the inversion is now price would ignore that gap, right? Break above it, come back, retest the gap, and then go. So you're looking for it to fail. So these are just for me when they fail, honestly. Uh, let's use some text. Let me put that in there. Better? That's basically an inversion. Not all of these, right? Just how I'm determining it. Say same way for the down one. Candle one, candle two, candle three, and then again you would just want to see price. Again, let me draw the gap first. Let's see, you have that gap right here, gap right here. You know, I think I might have drew this first one wrong. My bad. But I'd want to see. This is the one you'd want to see price break up, come back down. This one's a little opposite. I thought I was drawing the I thought I was drawing the down candle over here. So X that out. Instead of price using it to break up, you'd want to see it come down and go down, right? So that's just my own little review before now we get into it. Break a block overlapping with either an inverted fair value gap or fair value gap as prices. Yeah. Yo, I've been looking at that, Bruce. It's crazy. I've just started learning a lot of these type of stuff. I strictly trade price action. But now with this order flow of the fair value gaps is awesome. So again, fair value gap, right? We got candle one, right? We see that. Candle two and candle three, and just that little space in between. You wait for it to pull back into it and fail. And then for our stop losses, like we were saying, so we could have an entry here at the midpoint, and then stop loss would be above here or above right here, right? The low of candle 1 does not overlap the high of candle 3. So the low does not overlap with this high. That's the gap. There's going to be the midpoint. That's where the fair value is. Right, so SIBI, BISI, sell side imbalance, buy side inefficiency. So again, just bearish fair value gap to me. They're saying all of this, the sell side is stronger and the buy side is inefficient. You can see it's a big red candle in my opinion. And then the BISI is now the bullish fair value gap where you can see strong buy side. Clearly the sell side looks inefficient. Right, the complete opposite. Just wait for that retest. Again, come in, drop. Since I trade the two-legged pullback, right, what I basically look for nowadays with the fair value gap is this is a leg. When it pulls back into here, it should give me a second leg. That's what I'm looking for. Same type of thing here. That's a down leg, and then I'm going to look for a second down leg. I love it when it pulls into the fair value gap and it gives me a second entry. Because if you've been watching my channel for some time, this is the type of, you know, directional connection piece that I trade. This is for either the downside, I try to get in here, or the upside, and I try to get in here for the second entries, right? Or the failed second entries. So again, fair value gap, candle 1, candle 1, candle 2, aka spacebar, candle 3. And yeah, I always just call this a spacebar. Literally, that's how I started learning the fair value gap because I just kept saying, maybe I can't remember it. So, and it makes sense because that's the bar that makes the space. So, it makes sense to me. Not sure if it will make sense to you. Um, and again, this volume imbalance is just really surrounded by. Now, this is just only one candle, second candle on this one. But what you're looking for is this wick. See that wick? The body doesn't go into it. Only thing that happens is another wick. That's all that happens. And that little overlap, that's what they call that little gap right there. And this one opening gap, right? Pretty simple still. You only have two candles on this one. One, two. The thing to notice though is that it just doesn't touch and then it just has a space. And I think that's easy to notice. It doesn't matter if you're a new trader or what, it's really easy to notice because it's like, what the heck happened between here and here? Right? Boom, boom. Entries. Now again, you can see enter right when it breaks the top of the gap. Enter at the 50% of the gap basically. The entry is when it gets filled. And I think what's important here is to, yeah, you might take an entry here, but you want to see it start to make that rounding pattern, right? Maybe on a lower time frame, you can see, something else giving you an upside gap right here. And then, yeah, stop loss. You can see either right at the below the end. So that's the end of the gap. So right here, or they're calling it the order block. I'll say maybe I call it the first, right below that first candle. Yeah, the order block is here too. But even if no order block, sometimes I like to try to see if I could get it below there. This first candle of the gap. And then just the swing, I guess they call this. But yeah, this and this basically same thing, right? Maybe you just put it a little higher here, right? Where here is you put it at the low. Whatever you're comfortable with. For me, comfortable, yeah, but it's like depends how much I believe in the trade these days, right? As I'm learning how to trust these things. Now the inversion, this is the one that seems to be very powerful, and I've been noticing this a lot lately. Um, so again, here, what are people thinking? People are thinking, it's just gonna come here and then drop down, right? But I guess you maybe have to look at a higher time frame to see that this is taking out a level. And then for me, what I'm also looking for is this little first one right here. I would kind of already be switching my mind, right? 'Cause that's a little gap right there. And right here, when they close above it, you know, just to kind of help yourself, be like, what can I see to maybe help myself with the inversion? I just kind of look at the whole activity. It's not such a big gap. They just bursted through it. And then boom, right here, when they close above, I would say, that's the confirmation. And what closes above, I would pay attention to how the body, the body here closes above the top. So instead of this, if especially if you're not in the trade, right? If you are in the trade, if you just chill out for a second, if you're already trying to take the short here and they come back and you see they might stop you out, once you see this activity, then you try to enter here because you would be thinking, since it didn't hold down, it's got to hold here, then go up. You see, that's why I look for this leg right here. I'll be looking for at least that distance when I get in the trade. Yep, there we go. All right, on to the next. Buy side, sell side liquidity. To me, I don't think this one's too difficult. Might be when you first start looking at the chart, but should be pretty easy. Like, say this is price, this is price. Like, so liquidity for the buy side. So obviously here and here, meaning if I get in a trade here or even here, where would I be looking for? Right here and right here, simply because I know whoever took the short, the stop loss is going to be in here. Stop loss here, stop loss here, right? Stop loss here. You can see they already took that one out. Now stop loss here. So I think it's just the area where it's really bunched up and buy side. Oh no, I mean they have all these names and stuff. I don't know. I'm glad I understand it, but I don't know. Buy side, like boom, the target I'm looking for when I'm in a long, right? Let's say I'm looking for a down move though, then I could say there's liquidity here because people who took the long stop loss here at liquidity here. And why? Because I'll just be looking for stop loss to be here, stop loss to be here, stop loss to be here, right? And that, let me actually remove this. Or let me do this. This is buy side. This is the sell sides. Types of liquidity. That one I'm not too sure what that means. Like I don't know if it's like higher time frame or lower time frame, right? Or but like I'm just not sure about this one, about the types. So we will see and we'll learn that one. Yo yo, what's good, bro? Well gone. All right. And previous day, I mean, that's where you just have to start keeping up with your chart, right? Same thing. Like this was the high of the day here, right? We do this whole session, and now we're gonna have a whole session right here. Yo, how long I've been doing this? Yo, I've only been trading for like 2 years now. Really, about to be 2 years. Last year was my first year trading, and now I'm doing this now. Um, so again, liquidity. If this is gonna be your brand new day opening price, how about you, yo? How long you been trading? You just started trading? Say this is my opening price now for the day, right? It depends what I'm looking at. If I'm looking for a long, this is my liquidity right here. If I'm looking for shorts, this is my liquidity. And same thing, like let's say these are the sessions right here, right? If I'm looking for a short, that's my liquidity. Looking for a short, that's my liquidity. Looking for a long, right? In the session, this would be my liquidity. So I just think it's the peaks. Like just look out for the peaks, right? That would be a liquidity spot. This would be a liquidity spot. That would be another one. This would be a new one, right? The price goes on. June 2022. Okay, okay. That's what's up, bro. Yeah, man. Still new to the game. Had some success though, because I focus on the process, but still new to the game, as you see me doing here and learning. And I'm just like, I like to show people, because I get a lot of questions like, yo, how long you been doing it? And then the next question is, oh, how do you make profits so early? And I promise you, bro, this is how. I promise y'all, this is how when maybe everybody's chilling, or you only get on when the market is going. I do this stuff, you know, in my spare time. This is what I like to do. So you see this little lower high right here. Pay attention to how this peak is lower than this peak. And then this one is lower as well. So we know they could easily be targeting these spots, right? It's a little peak. They try to protect it. Same thing here. I just kind of look at the motion. This was a low. Boom. This peak was lower. Boom. This peak was higher. Signs of the market going up. Same thing. Just take a look at the peaks. This peak here turns out now to be higher. Uh, Again, I got this peak here and then this peak here. Yo, if you're not profitable yet, let me ask you some questions. I mean, I don't know nobody else here. Are you committed to one strategy? Like you have a strategy that you say like this is what you're looking for every day? Do you have something like that? And again, right, with the fancy words and the fancy things, this is our, if I'm in a buy, this should be my target. Why? Because the people who first started selling, they're going to have stop losses here. And the stop loss is the areas where the stop loss is, I'm more than likely to really get out. You know? Like I know smart traders or long-term traders, when they're buying here, they're gonna want to sell back up here and get out, and they're gonna sell at the places where there's other people that have already clearly showed that they're selling, or there's orders up here that you can get out, right? And if I was, say, I'm taking a sell, this would be my target because the same thing, people who just bought down here, right? All their stop loss is gonna be here. So just looked at those like targets. Like people are going to be seeking those out. Big term traders are going to be seeking those out. So swing high at the top of the range will have stop losses from short positions. Buy stop. This is called buy side liquidity. Exactly. Swing low at the bottom of the range will have stop losses from long positions. Sell stops. Right. This is called sell side liquidity. I just think those things are confusing. And right, old highs and old lows. Like you can say like there's a session. Right, this was yesterday. Right, the session break is like right there. Oh, terrible drawing. Can I just get a straight line? Mhm. uh, let's see. So let's just say, boom, that was yesterday, and this is a new session. Same type of thing, right? Where are we aiming for? If I'm taking a long, where am I aiming for? Let's say I take a long right here. I'm aiming for here. And let's say actually deciding I want to take a short, and I take a short below here. I'm aiming here, right? I don't know what just happened there, but sure, right? Yeah, I actually started December, bro, but I'm still back testing it on a demo account. We're about to move to a real. It's a tough 5 months though. Yo, I wouldn't say you should move to a real account yet, honestly. I would say, bro, you should get like a prop firm account. Like I be sending out people the links all the time. I think you should get a prop firm account and test that shit in real time and get real feedback and still have a possibility to get your cash in the end because you need real time data and all that stuff. So demo accounts are cool, but I would say now that there's prop firms, you should get a prop firm account. Like I think they're mad helpful. Just, go to Apex um, or Tradeovate, wherever the hell you want to go, bro. I use Apex, but get a prop firm account and yo, I don't know, yo, hit me up. Like, send me a message or something on Instagram or Discord or Twitter. Maybe we get on a call and go over your strategy. But bro, you just gotta find a strategy and stick to it. And then like in the beginning, I just only stuck to my strategy. Like all this stuff I'm going over, I even had a friend in my group. His name is Jeffrey. He used to tell me about all these things, all the time, but that wasn't my strategy, so I didn't give a fuck. Honestly, I was never gonna. I've never paid attention to that shit till now because I was at the point where I knew my strategy so inside and out, and I was getting so much more awareness by waiting for like. So if I have a strategy, right, and I'm waiting for it all day, believe it or not, when you're there watching the markets, you're low key like learning other stuff, like seeing how the market's moving, like seeing how what it's doing today from what it was doing yesterday. You start noticing that stuff and you start gaining the knowledge. But for real, like I said, one strategy, just one. Just start with one nice strategy, and then just repeat it day in day out. Repeat it, repeat it. And then you start worrying about your risk to reward. Just make sure you're doing good risk to reward. Like if you're risking $100, you know, if you're risk no, I'm doing stuff, bro. So if you're risking $100, make sure you're getting $200. Every trade or 300. That's the only way to make it, yo. It's the only way to make it in this game, because you're gonna lose. Don't think you're gonna get better and like avoid the losses. You might avoid a lot of losses you were taking before, you know what I'm saying? But you're really gonna the risk to reward and the strategy and being able to be patient and wait for your strategies, bro. It's gonna be a game changer for you. But yeah, yo, I would say keep testing that. Same thing here. Right? We got this is now like what a weekly chart and a monthly chart and a daily chart. Same thing. Sell side liquidity here, buy side liquidity here. And this is the type of stuff that will help you when you trying to pick a direction or trying to see where the price is going for the month, the week, the day, right? I mean, I'm kind of getting ahead of myself, but let me show you guys a little insight. Like for example, let's see what we got right here. Uh, you got a little order block right here, right? We also got a little fair value gap in here, right? So when we see it come here, thanks, bro. Yeah, I'm finishing my exam tomorrow. I'm going all in. What's your IG handle? Yeah, I got you right now. Hit me up at roachgang.industry. Yeah, man, I'm here to help. No stress. I got you. I just love passing on the knowledge, bro. Everybody could eat. We could trade the same strategy, different strategy, don't matter. So for when I see this inside activity going on, right, and it starts to fail, I need to look for external place. This is called internal liquidity. So now I'm looking for external place. Now if I'm taking a short, I'm looking for where it should go to or where it could target. Right here, easily. Easily, right? When you start looking for these peaks, you would start seeing that. Right here you got a little uh let's see. I guess you would call this a order block right here, right? Because this is the up close candle in this little section. We come back, basically retest that because we broke out of this first little gap here, so it has to be the retest of this, and then we just start dropping, regardless of how you recognize, because somebody else could see a different strategy. Regardless of how you recognize, just say you recognize the market should be going down here. You should see this as your target, right? Unless I'm still scalping. Like I still take 2 point scalps on the ES. Easy, and then I'm trying to leave some to let it run to the main target, but I'm still here just getting my base hits, right? Because when I'm trading my prop firm accounts, and if I'm trading 5 accounts, even 2 accounts, but let's say you're trading 5, 10 accounts, remember that 2 points. I trade 2 contracts for 2 points. That's like $200. Add that up. If I got ten accounts, that's a quick $1,000 I made for the day. And then if it runs, great. If it don't, whatever. And now the sessions, right? So if you know there's sessions and they're always 6 hours, so you can look for the target of those sessions. This is like the first 6 hours right here, right? The Asian session. Then you got from here to here. That's the next 6 hours. But look how we have liquidity, right? It's basically generating the liquidity. So if I'm taking a short, where would I look at? I would look at this lower. Oh, well, no. I'll look for it. This low right here, right? And then even in this session, if I'm taking a long, so we got that right there too. We got this low, right? So look at all those places that we could look for shorts. If I'm taking a short. Now, if I'm looking for a long, where would I look? Here, right? let's say it starts to sweep here and curl back up, I look for a long back up to here and here. See what I'm saying? All right. Now let's get on this market structure shift. Boom, boom, boom. So if you watch the first one, like you can see, I'm just going over it. I'm just going through it, scanning through it. And then I usually do it like this. But again, I'm trying to show y'all what it takes. I don't just come on here real quick when the market's gonna open and I can recognize all this stuff now. I come back and I practice, right? Practice, looking at them, seeing which ones work. I mean, market structure shift might go into this too, but if not, a key to add for the fair value gaps is that you want to see them after we break a high or a low. For example, I want to see a down fair value gap, right? After I get, thanks, bro. Gonna hit you soon. Have a great day. Yeah, man. Copy, bro. Be good. Look at more. I want to see the fair value gap. Let's say this was a short term low. Then we sweep this high. Then we break this low. The key is I want to see us break this low right here. This low. God knows. For me, at least, I don't know. Maybe, there could be other stuff. There could be an order block. There could be blah, 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 whatever, right? But for me, I notice they work best after they break a low. And then now it's like when they break that low, you want to see a bearish fair value gap in here somewhere, right? And then you would basically now want to see them come in here, test it, and go back down. Let me actually delete that because so let me do this too. Let me make this low a little lower. Right? So you want to see them come down, retest it, and then if it's coming down, where is your target? We just went over this, right? We keep going over it. The sell side liquidity, which would be right there. So you see how you just start adding it all up? Like it's pretty amazing to me, honestly, this stuff, right? And you can say the same thing for if you're looking, uh, let's say bullish, right? Boom, boom, boom. What do you want to see? You want to see them come in here and do what? Break this high. Oh, no, wrong color. And we just you could call this what, like a short-term high or something, right? You want to see them come in here. My cousin telling me I gotta get ready to go to the river. So you want to see them come in and break this high, right? Because that's showing you the shift in structure and also showing you that we want to go the other way because this is the last high, short-term high. So when we come up and take this out, right, you want to see it also make what? Fair value gap to the upside somewhere here. And then you want to see them just come back down, retest it. What are you targeting and aiming for? Same thing again, right? Buy side liquidity. So displacement for me, gotta speed it up a little bit. Displacement for me is when you can see the gaps going down, right? I want to see a gap. I don't want to see it sweeping. Right? I want to see when price is going up. This is what I'm seeing. And what do I want to see? I want to see that at like a key level or something, right? Let's just say this is like a key level here. We break through it and we do that. Key level here. We break through it and we make that gap. That's going to tell me, hey, look out, we potentially will keep going. right? And that market structure shift is kind of like this here, breaking the short-term high or we're breaking a short-term low. And higher time frame level, right? It's on like your 1 hour, right? Or your 15 minute if you're trading on something lower. Um, the other day I have a trade that I uploaded. Actually, I uploaded it on there. It's a it was a 4 hour level I was looking to get broken. You can see I uploaded the other day. It was like 3K in like 17 minutes, I think it's called. But if you look, I was looking at a 4 hour level myself because I know price is gonna pull there, and then when I'm looking for it to break, I could get a nice little run from there. That's right. Displacement is aggressive move with full bodies candles. This can form in a single candle or multiple candles. Generally, displacement have the fair value gap, right? So again, you see this when we start to break here, we have a gap there. What do you notice here though? We have no gaps. No gaps. So when I'm not seeing no gaps, I'm looking for price to start curling back up. And then what can confirm price curling back up? Look at this right here. I have another gap right here. And this would actually be nice for still going ahead, but a little inversion because we have this gap here as well, right? Overlapping. So if price comes back down in here, you look for it. Boom, up there. And then what are we targeting? Again, buy side liquidity, right? Hey, y'all can correct me if I'm wrong too. Remember, I don't know nothing. And market structure shift. When displacement occurs over or below a swing high or low, a market structure shift happens. A market structure shift, MSS, indicates a change in trend from bullish to bearish or bearish to bullish, right? So again, short-term low, right? If price was going to keep going up, we should not be breaking. We should not be breaking below here, right? If we were going to keep going up and up, we should make another short-term low and then keep going. The second we see it get broken, we need to be on alert. And then again, prime time, where it where this shift happens, look at what's there, the fair value gap. Then you try to get an entry, right? Enter here, or enter as soon as it starts to break in. Where's your stop loss? Stop loss gonna go here or above here. And where is your target? Target will be the next what? Sell side liquidity, right? Which would be these perfectly looking lows down here. Yeah, that's another little insight. Anything that looks too perfect, anything that just looks too good, I'm like, yeah, we're probably gonna go for that. Now, higher time frame. It is important that a higher time frame level is engaged prior to the lower time frame market structure shift, right? So you want this higher time frame level, right? You would say like, oh, this is on like, let's say this is a 15-minute chart or 5-minute chart, but this level is from an hour chart. That's nice. When you see it start to get swept, right? Oh no. When you see it start to get swept, and what's the key to help you noticing the sweep? Right here, right? We are not getting any fair value gaps. We are not getting any displacement. This is how I look for the sweep now. And then on top of that, it also gives me, again, right, my fair value gap here. Where's my target? First target here, second target there, right? What's the shift? What's indicating me to me the shift? This little short-term high getting broken. As soon as that gets broken, one I need to pay attention from. I need to pay attention from this not this level getting hit, and then this not giving me fair value gaps. But I really need to pay attention once it breaks this high. All right, last one. Inversion. Now the inversion again, very powerful stuff, right? Love it. Love to see it. Yo, and I just made a TikTok. My cousin just made me make TikTok. So yo, Y'all go tap in. I'm pretty sure it's called Roach Gang Industry as well. Or no, it's actually Jamaican Sniper. Let me put this in here. I'm gonna be uploading a lot of these snippets on there. We're getting real active. So again, fair value gaps, inversion, consequent encroachment. Consequent encroachment, again, these words, don't like these words. The middle slash halfway point of the gap. Right, just the middle. Just the middle part. So if this is a gap right here, this little middle part right here would be the consequent encroachment. We already kind of went over the inversion. This was a down gap, right? You want to see price break above it, test, boom. If this was a up gap, you want to see price break below it, retest it, go, right? And we know the fair value gaps already, right? 3 bars, space in between, right? Little spaces. Old Sibby, old Bissy, so old fair value gap, old buy side fair value gap, or old sell side fair value gap. So Sibby would be more like this, or like this, and that Bissy would be more like this, or like this. Right. So the inversion is just these what failed. Just hit failing. So boom, these are regular fair value gaps. So if they were good, what would you want to see? If these were good fair value gaps, you would see come in here and drop, right? And you would see it come in here and bounce out. When they're inversions, none of this happens. That's what you need to realize. When the inversion occurs, this doesn't happen, right? What happens instead? When the inversion occurs, we break out of it, we come back, retest it, and take it out the opposite way, right? So instead of it holding here, it breaks below, retests it, and then actually uses it to go lower. Complete opposite. Just look at it as a failure. It's just like again, kind of going off topic, but it's just like when they talk about the breaker block, right? The breaker block is just like an order block that didn't work. Like let's say right here, I got a bullish candle in a downwards market, right? It's going down, it gives me this bullish candle, it keeps going down. When price comes back here, people are looking for it to be a block of some sort, right? They're looking for this to be an area where price is going to drop. But instead of that, right, price doesn't do that. It actually breaks above it. Oh no. Get some black here. It just breaks above it, then actually uses it to boom. Some people enter here. I like to wait for the retest, right? But it's like when these things don't work, they make up another word for it. Like, oh, this is now a breaker, since it wasn't an order block. It's just the same order block that failed. To me. Don't know. Again, inversion. The inversion is gonna happen. What do you want to see, right? No fair value gaps in here. What are we gonna expect? Price to break up, boom, use it, and then go up. See, this is the confirmation right here. Once we close above the top of that gap, the body closes outside of it, you're really looking for the inversion to occur. Nice. All right, boom. See that we close above, then what do we do? While we're closing above, we also have this bullish fair value gap inside this inversion. See that? So now we got the activity. Boom, boom, and we're looking for up here. We're looking for this target, right? Even this little target right here when you first get in. That's a nice one. And I guess you got a little order block, a breaker block in here, right? See what I mean? It's like people will be looking for this, so then now when it doesn't work, it's a complete other thing, right? Just learn how to pay attention to the price. That's it for me. And learn the things till you really understand them, so then you can rephrase it to yourself and to other people. That's why I love teaching people. It helps me. As much as it's helping them, it helps me. So boom, target one hit, you'd be looking for the next target. Right? Consequent encroachment. Again, there's a gap right here, gap right here. This is the halfway point. Don't make it crazy. You do not want to basically see price too much. You like to see when price pulls back here. You like to see when price pulls back to the 50. You don't want to see price really, really pull back below here. That's the time gap might be invalid. Unless, right, unless it curls back up and the body closes back inside. I've learned from the, what is it, ICT guy, right? It's mostly the body. It's what you got to pay attention to is, right? The wicks are telling you what happened, but the body is showing you the strength. All right, so boom, right? That curling action, we test the 50. That's good. See how they close below now? Already you should be a little like, might still work, but even if it's working, you say that. And then when you see this, you think, hell no, right? Now you can see where we're going for, right? So old Civi, old Bissy, right? Like there's a fair value gap here. It targeted that, took it out. I mean, I guess there's a couple, yeah. We got one right here. We got one right here. So you see when you're going up now, this is your target. And look how they did the inversion on this one as well. Right? Boom, boom. Just like how we did the inversion on this. So you see how this little piece right here doesn't seem crucial, but it is, especially when there's that higher time frame level, right? That they talk about. You want this to be a 1 hour level. You see on the 1 minute, drop down to the 1 minute, you see that curling action, you see a fair value gap, boom, you want to enter. Stop loss goes either below here, or even better yet, below here or here. So yeah, guys, good stuff today. I will see y'all maybe later or tomorrow in the rising. I think later I gotta come on here real quick and do the review of just those two streams I had, and I gotta make a review video of the trade I took on Friday. So yeah, hopefully y'all learned something. See y'all. GG's.